So this Periscope, it's a feature inside the Fractal system. And you don't need really much experience to be able to achieve these gains like we're seeing. And the gains, the idea of the Periscope system is to have outsized gains, like hundreds of a percent or thousands of a percent, like we're seeing. So it just tries to zero in on contracts that can have the potential to move and to get these gains like we're seeing, and kind of disregards like everything else. It's like it doesn't really care about other stuff. It's just trying to find those big gains. So how does Periscope work? So the system runs 7 days a week, and it's looking for these trade signals. So it runs Saturday and Sunday also. And the reason is when you come into Monday's session, sometimes there's signals that can be used, that can be executed against, traded against. And you'll see on Saturday and Sunday, when you go in there, the signals will change actually over the weekend. It's trying to figure out what could possibly be coming out of the gate. So the signals are used to select the contracts, and the contracts are based on 4 p.m. Eastern time on expiration date. So when it generates a signal, it's saying, hey, I've got, until 4 p.m. when I expire to possibly achieve the target. And it is possible, that there'll be other contracts that are a little bit higher or a little bit lower that strike to even have more outsized gains. However, this tries to do a risk to reward balance. So it's not trying to go super crazy to where you can't achieve some upside. So that's why, it just kicks out what it can mathematically calculate based on modeling underneath. The internals of it is there's the fractal system, that's Periscope, and then Rogue Moose has been showing that. You go into the fractal system and you open up Periscope. So the way it works is the fractal system on the front end, Periscope, is communicating with the SQL server. And there's servers running in the background. Because it takes so much time to do the processing on these symbols, you can do it all on one server. It's got to have a bunch of, shared CPU because of all the calculations. It can run 2,000, 5,000, 10,000 calculations on a single chain, on the chain plus the underlying, just for one thing. So it can have thousands of calculations because it's making synthetic adjustments. It's, like the market maker move. And it's also running some other logarithms outside of that to try to figure this stuff out. It's running in real time. So those servers in the background run in real time, getting up-to-date contract information. So Yahoo has two sides to it. It has historical data, and then it has more of a real-time side for the option contracts. So when the servers are running, it's actually going in real time. And this is going to be important in a minute. Who's delivering to us the real-time information for the options? It's maybe got a minute delay. Then there's some background processes that are obtaining contract information out of Yahoo. Those are delayed by 10 minutes. And those communicate with the fractal system on the front side. They communicate with the backend processes on the back. And then they also communicate with the SQL server. So that's kind of how it looks. It's a pretty simple model. When you get down into the nitty gritty, it's kind of complicated, but that's how it looks overall. So the objective is to produce outsized gains. So it's whatever the normal market can return. Like, let's say, the QQQ can go up 2% or 3%. or go down 1% or 2%. So it's trying to magnify those moves. You know, it's trying to be like, okay, I can get 100, 200, 1,000, 2,000, 5,000% on a small move. So the moves are mathematically created. So it's not guaranteed to be achieved. You know, you can have things show up and they won't be achieved because the math and the real world, they try to come together, but not always. To obtain these outside gains, we have to have identification of the potential outside gains. So that's the signal side, you know, is the identification of what may happen and or what could happen, what can happen. So the position sizing is important. You know, you don't want to take any single trade and be like, I'm going to make $100,000 by Friday. And I'm starting with, you know, I'm putting $1,000 in it and that's all I've got. You don't want to do that because that signal could fail. I mean, sure, you can get lucky. You can have back to back to back to back to back, you know, signals that work, and you could keep doubling every time you go in and walk out the $1,000,000. But that's not a good idea because you can also, let's say you take the first one or two, you're at 10, 20, 50,000. And then you're like, I'm gonna take 50 grand and put it in. I'm gonna get 500 this next time or 200,000 the next time. Well, I could evaporate. So the position sizing, you don't want to go too crazy and keep, you know, doubling it, double down. So the system tries to minimize the risk. So it's trying to offer up contracts that are not very expensive. So if they do go bad, you know, because overnight volatility, you could have some money in a contract and it could be zero the next day. So it's trying to find things that have leverage working for them, so you don't have to go like outsized, you know, with your speculation. So you don't have to like put in a lot to try to get out, you know, something that's mediocre. This tries to find things that you can put in a small amount and get, you know, more out of it, significantly more. So the metrics of a signal are the signal, date, and time. So you'll see it shows the weekday. It'll be like Monday, and it'll show the date, and it'll show the time of the signal. So it records that, so it can track it, can figure out if it's working. And it shows the contract with it that it's selected. So it'll show the expiration date, and then it'll show the strike. And the strike is designated with a P or a C in front. So if it's a P, of course, it's a put. If it's a C, it's a call. And then it has the BTO, which is the buy to open price. So that's the price that it's saying, hey, you know, this could work at this. And then it has the STC, which is the sell to close. So what it does is it says mathematically, if you buy at this level and you sell at that level, you could have the theoretical gain. The theoretical gain is the target percent gain. So buying at the open, selling at the STC, if it does achieve that, then you would have the theoretical gain. And keeping in mind that it gives it till 4 p.m. on expiration date for that target. So it's kind of hard because like sometimes like cat, I wasn't too big on that. I sent it out anyways. I was a little leery on it. And I'll show why I was a little leery in a minute. But sometimes like on cat, it was better off to probably sell it when it was up 100 something percent, because that one was really iffy. Okay, so after signal generation, so Periscope will throw out a possible signal. There's going to be a 10-minute lag in it. So it's going to throw out a signal in real time. You can go in there and click it. You can see like it maybe at 9:50 a.m. it'll throw out something. When you click on that signal, it's going to show whatever contract data we have from Yahoo. It's 10 minutes behind. So the signal is actually 10 minutes in the front of the data that Yahoo's returning to us. They introduce a 10-minute lag in the data. So whenever we get a signal and you click on it and you don't see anything, you're like, Russell, this thing doesn't work right. I'm like, well, nope, it's Yahoo. They're 10 minutes behind. So you have to keep that in mind. You have to be like, okay, here's a signal. 10 minutes later, I'm going to start to see the data populate heading into that signal. So the system in the back is fine with that. It does some things, so it doesn't necessarily need all that. So that's why it can throw out a signal ahead of Yahoo actually offering up price data, because it's doing totally different type of computations. So the actual high and the percent actual that you'll see when you're using Periscope, after a signal is generated, from that point moving forward, it starts tracking it. So when you open the contract, like let's say you buy it, like we saw Apple, right? We get Apple on Monday. And then as we open the contract on Tuesday, you know, it's up 700%, 800, 1,000%, right? So it'll be tracking that. So it has the suggested sell to close, right? So maybe we're at that level or above it, and it's tracking that in front of us as the data is coming out. So recapping this, we have the 10-minute delay in the contract pricing. So when opening, you know, just keep that in mind. We have the signal generation, which is real time. So when you click on the signal generation in real time, you know, you're going to need to give it 10 minutes to catch up. It'll make sense when you're using it, but you just need to be aware of that so you're not freaked out. It's because we're cheap and trying to, you know, get data without too much cost. So when you access the Periscope system inside the Fractal system, you want to right click. You know how you right click, you option analyzer, generate by signals, all that. You'll right click, Periscope will be at the top. So you just select that. So when Periscope first shows up, this is the window you're going to see. All right, so I'm going to say Periscope up there. You're going to see the tickers. That's our ticker universe. That's what we've got in there that we're watching right now. The more tickers we watch, the more horsepower we need on the back end. So if we're, you know, doing a lot more tickers, we need to get a lot more servers for processing. And that's kind of what helps win too, is having more CPU capability. So anyways, it will have all those tickers. When it comes up, it's going to say no contract data is available for this signal. It's basically waiting for you to click on a symbol. So a ticker. So it's waiting. It's basically saying, hey, I'm ready to roll. Click on a ticker and I'll start showing you something. Okay, so there's only so many tickers we're tracking in our universe. As I mentioned, for us to start expanding this, we need to have a larger server array, because all the calculations required of the system. It does a lot of calculations. So by selecting a ticker, it's kind of like opening a fractal graph. You double click on the ticker. So for example, Apple. I want to see what Apple's saying. So I double click on Apple. So we'll see, this will populate here. We'll see the date and time of signals, and you can see here it's generating them on Sunday, even though the market's not open, because options, right, they're always moving in price, even when the market's closed, because of the theta burn and stuff, because they're, you know, an expendable product that have an expiry on them. So they're always moving. So it's still Saturday, Sunday, it's still out there doing something. So you'll see the signal, you'll see the contract, and you can, on the little slider here between the columns, you can move the slide around so you can see more of the contract date if you want or whatever. But basically it's showing, you know, Friday, December 8th. These are 2023s. Then it's showing our strikes and our buy to opens and our sell to close. And then it's showing our target percent gain. So when it generates that signal, it's saying, hey, this is what I'm seeing at the present time. The icing on the cake is when we exceed our target percent gain. So Apple here, you know, Monday when I pulled it up, it was at 22 cents buy to open. That was a suggested, and it was saying to sell it at $1.82 for 727.3% gain. Well, we actually had it, went to I think 1,100, almost 1,200 actually after that. So, the upside outperformed. I didn't check it today. Could be up even more. So, but that's what it's initially thinking. Because one of the hard things with options is you get into the 22-cent option and then you're up to 25 cents or 30 cents. You're like, oh my God, I better sell it. And then they go on to run, 200, 500, 1,000, 2,000, 3,000%. You're like, wow, that was just stupid. So this thing tries to help figure that out mathematically so that it's not like, so eager to sell. And, just like with Google, right? When we got into Google, it traded down when we got into Google. And then finally, today it popped up. So, it's showing us where it thinks it can be at. And not everyone works out. This thing is not a guarantee every time you see a signal. So after you select the ticker, so like let's say, we clicked on the Monday, December 4th at 11:35 down there. So see how the contract data, we were right around a little after 11 and we have the 10-minute lag. So that's what you'll experience. So when you get that signal generated and you double click, you're going to be like, well, my price data hasn't caught up yet. Well, yeah, you have to give it 10 minutes, then it'll catch up. So it's always 10 minutes behind. I keep harping on this because it's a little bit weird when you use it. So down below, you'll see the, and it's just because we're using Yahoo data, free data. It's in the public domain. So down below, when I double click this, after I get the signal over here, I need to fix this. It's showing up a little box. It should show up an arrow. I'm using a character set and it's not mapping right. So I need to just draw an arrow in the graph. So anyways, after it says the BTO of 0.22 and I click on it later in the day, like I click on it after the market's closed, for example, it's now, all the 10 minutes have worked out and it's now showing a populated graph. All the dots are where trades have occurred. So it's just like the vector in Thinkorswim that we use. If there's no trade that's occurred, there's just going to be a line between the dots. So every time we see a dot, that's where a trade has happened. So here we go. So once we get our signal and it starts trading in front of us, those two columns are going to start to become populated, actual high and percent actual. So in this case, there was a target percent gain at 188.20. Our actual high was 250, and the percent actual moving forward was 127.27% that it moved. So as we're moving into the future and you double click on past signals, like I just write them down, for example. So I'll write down my signals and then I'll go back in and double click. I'll see the change. Now it only records the high side of the move. So let's say we had 188.2% target and our percent actual, let's say we only got up to 127% gain on that contract. And then after that, it goes to zero. It's going to show that it was at 127.27%. So it's going to stick there and say that after the signal was generated, here was the actual high for reference. I do that because that's how I like to see the data. So I like to look down and see when signals were generated, how high they actually were able to achieve, how high they actually got to. Because I can see visually the contract. If it did go to zero after that, I can see it going to zero. But I want to know after signal generation how high it went. And that's based on the BTO. So let's say in Apple, the BTO is 0.22, like we had on our signal. Let's say it goes down to 12 cents, and then, it goes to $2, right? That actual is from the BTO. So it's not, once the BTO is put into concrete, it tracks from there. So if it went down to 12 cents and then went to 2, it doesn't readjust. It just says the entry was at 22. So if you do go in at 22, like let's say you split your speculative capital and you're like, well, I'll buy half on signal. And then if I get a better entry, maybe I'll buy another half of my allocation, or maybe not. But if you do, and you're like, well, signal's 22, now I got a signal at 0.12. So I'll put my other 50% at 0.12. So I'll have a blended price, average price. So now you've got two areas on here that it's tracking from, two different BTOs. So you can see the outcome on that. So the actual high percent actual is always from the BTO price that you select. Okay, so here's something that's going to be kind of weird. When you go in there and you click on a signal, okay, here's our Apple signal. We had it at 22 cents on our contract. When I double click that, it populates a few other things in the list. Maybe it populates 2 or 3, maybe 10, maybe 20. What it's doing is, because when this window opens, I don't want it to be overly burdensome and slow to open and to click on things. So when it retrieves the data, it fills in everything for that contract in your list. So like, let's say there's 3 different contracts in there. It will fill all the contracts in that are for your current blue line. So like, let's say there's a call 130, there's a call 135 and a call 140. If I click on the call 130, everything that's been generated for signal on call 130 becomes populated. So if I want to see the 135 and the 140 populated, I'll have to click on the 135 and click on the 140. And then it'll populate everything in the list. Now, initially, the reason I have 0.0 on my blue line on the actual is because this is from when it first got signal. So it's on the signal. There's no data moving forward yet because there's a 10-minute lag. So for the first 10 minutes, when I double click, it's going to say that percent actual 0.0 because the data has to catch up to the signal. So that's why it shows 0.0. The other ones are other signals, and the data has since passed, so it's able to show those, like the 23, 53, 31, and the 61, 54. All right, so contract and signal selection. So on the Apple Play, what I did was I opened up Apple. I then looked down the list and I saw what was interesting to me. And what was interesting to me was the 727% upside. I didn't, when I saw it coming out of the weekend, Saturday, Sunday, the 75, the 87, I'm like, not too interesting. 22%, not too interesting. And those contracts are very expensive. It decided to spit that out for a second. So the one that was interesting was the 22 cents to $1.82. It's 727. So what I look for when I go in here is outsized gains. I'm looking for stuff. I like the idea of 700, 500. And I mean, 283, 284.30, 194.4. Those aren't anything to sneeze at, right? I mean, especially on Discord, people seem pretty excited when they get 25% or 50%. So to see 194% to them would be like, oh my God, that's really great. Well, to us, since we have this capability and this technology, we're like, okay, 194, it's fine. 284, whatever, it's great. But I like the 727 better. So that's how I select the contracts. I come in here and I'm just, browsing through. 11 o'clock is a good time to look. And I'm, just looking at things that are interesting, like Apple, Amazon, Google. And I'll just look and see if there's something that's like kind of an outsized gain, something that looks like it has a lot of potential. So that's how I posted Apple. And that's how I came to the 727 and the plus 1,000% upside was by that technique, just looking down through it. So I'm kind of like automation to a point. I like to kind of look at the stuff. Um, so that's why it works that way. And there's also some bells and whistles in there. I haven't brought them over yet, but it'll let you filter and say, show me everything it's at 500%, show me everything it's at 700, show me everything it's at 1,000. Right now, you just click into it and then you look, but that's a bell and whistle that I have that I just need to bring over. I'm trying to get the base code brought over from that Inspire program that this comes out of. So, um, so here's something to be leery of, and Rogue Moose and I were talking about this the other day on, I think it was BA Boeing. If you see how it says target percent gain, and they're all wildly high, 2045. I mean, there's one at 45.8, but they've got 2000, 2440, 3050, 4933. So just they're all crazily high. If you see that, I do not mess with those, with that chain, with that set of contracts. I look at that and I'm like, oh, those are just bait. They're to bait people in. Trading, retail traders that are trading, they probably go in the option chain and they would see something like that. Oh, wow, I can make 2,000%, 3,000, 4,000. And they bring down the pricing just so that they can try to, it's just, yeah, yeah. So when you're seeing that and you're seeing solid outsized gains like that, I disregard those. What you want to see is what we were seeing more on Apple, where we have, gains that are all, it's kind of looking kind of normal. Like we've got one that's 727, those others 283, 284. So that's what we want to look at. We don't want to go down and see the thing papered with 2,000. Sometimes they'll show 9,000% gains all the way down that column. And just don't want to mess with those because it's showing you this is low likelihood of working out. So here's what looks more normal for Oxy, where we have coming out of the weekend, we have 60% gains, and we've got a 114, a 94, a 96, a 78, a 65, 52. On Fridays, so this thing, Thursday and Friday, can just be astronomical gains. Sometimes you can have 5,000%, just, crazy stuff. So what I do on Friday is I have a cutoff. When I'm coming in and looking on Friday and I'm like, oh, it looks kind of interesting. After we get past 12 p.m., we get to 12, we get to 1, it'll keep throwing out signals. But you have to keep in mind that we're running out of time. And the signals it's throwing out are, I just don't, once we get to 12 and we're getting to 1, I mean, I just don't pay attention to those. Some of them may work out at the last minute, but it's just we have time compression because we have decay, contract decay kicking in. So it's like it may say, hey, man, there's like a 9,000% upside if this can happen. It may say that at 1 p.m. You're like, oh my God, I want to put $1,000 in it so I can walk out with 10,000 or 20 or 30 or 40,000. But it's running out of time. So, when you're on Friday and you're like, oh my God, I'm going to walk, it's 12:30, it's 1, it's 2, I'm going to swing for the fences. It's just, we're running out of time. So I usually, after about 12 Eastern on Friday, I usually don't pay attention to the signals anymore. Not that they can't work out. It's just, the system's throwing it out there as a possibility because the system doesn't try to mask anything. If it finds it, it throws it out there. So, come Friday afternoon, it's going to keep throwing stuff out until the bitter end. But after 12, I just kind of ignore it. You don't have to, but it's buyer beware type thing. So we'll go on to, and you've seen this already with Rogue Moose. We'll go on to Periscope on the fractal system. So I've opened the fractal system on my machine here. I'm going to go into Periscope, and it pulls it up. What I'm going to do is I'm going to click on, this thing's so annoying. I'm going to click on Apple. This is our Monday play. What was it? Monday, the 11:35. So here's the play we did. 22 cents, it's recorded it. So I'm going to double click and I'm going to look at it. So that's what it looks like right now. And you can see it's still, you know, down here kicking away, throwing out ideas. So here it's throwing out one for 40%. Here's one for 38. So as I mentioned, as I click, it starts populating more data. So let's check out Sunday. So Sunday at 3:15, it threw out an idea for a C192.5. Said there may be an 87.7% gain, and the actual was 359. So you can see over here. So since Sunday and Saturday, we can't trade because, you know, the contract, the CBOE is closed. The contracts aren't available. What it does is it comes down here on Monday on open, and it says, here's your buy on open. So set on open, it's $1.06. And then it said, you know, you could probably get $1.99 out of it. The reality was 285 came out for 359.68% gain. Now, if I click on, well, the market's closed, but if I click on this 1543 that was generated today, right at the bitter end, that's where we're at now. Again, sorry about the boxes. That should be an arrow right there. So it's pointing right here at that low. And what's happening is, since it was right at the end, there's still an issue with the Yahoo data. So it doesn't have enough data points in front of it yet because the way Yahoo works. So that's why it's not populated the actual at the present time. So if we go into, okay, so here's another little issue. So I just picked Airbnb. So we're going to go back to the beginning. So this is, the historical data has only started to be collecting for the first couple of weeks now in the database. So when we go back to Monday on 13th, 2023, you'll see that we have a signal here for 8 cents for 5,662% upside. When I double click that, it says no contract data is available for the signal. So when I first started this process on the Fractal servers, I needed to bring over data from Yahoo, and I was having a devil of a time with their processing and stuff. So there's a week in here where there's no data behind it because we have to store off the Yahoo data into our database. So that first week is scratch. And then when you get down into the next week here, then it's populated. So it's something to be aware of. Those first few days or excuse me, that first week, there's not going to be any data behind it. So let's check out our AMAT trade. And what is that? That's December 5th at 12:27. So far, you know, we had a buy at 27, it suggested. We had a high at 43 at 59.26. And so far, it's not really doing much of anything. So that can happen. That's why I don't want to put everything into one trade. It's possible that this continues just going sideways through tomorrow or down. And maybe it does hit our 700% tomorrow. Because sometimes they're active on Fridays. Like you can have sideways action all through the week, Monday through Thursday, and then Friday you can get some pops. So sometimes that can be the case. I think Rogue Moose was talking about AMD yesterday. That's what that looks like. So AMD went from 42 cents to 765, so it had a 1700% upside. And again, the reason for picking this contract was this outside gain at 433.30. When you look above, you do have quite a bit of time to get into it. So it's not like it says buy to open at 42 cents and you've got the next 30 seconds to enter this trade, otherwise it's going to leave you. That's not how it works. It says here's an entry, and then there is usually time in front so you can get into the trade. So here, since it was around, what time was it? 15:04 Eastern time, these are all Easterns, had about an hour to get into the trade, 56 minutes. So like let's say you checked it at, 3:30 Eastern. It's not like the trade ran off and left you and you're like, wow, I just missed out on 1700%. You can still some of these leisurely, like stocks you like, and still have time to get into them because that was 42 cents. And you can see here it just kind of went sideways a little bit. Looks like even probably went down a little bit lower than 42 cents for entry. So there is time. It's not like right then and there you have to enter. You have a little bit of time, so you don't have to be too panicked about catching trades. And again, the reason this one was selected, if you see in this list here, at the top was 54.7 and under 155. So a lot of 100% plus plays potentially. And then we had, one for 223. So that one looked kind of interesting. It went to 571. The one that was really nice was that 433.30. And I wasn't on yesterday when Rogue Moose was looking at these contracts. So I assume maybe he was looking at that one. Oh, maybe not. That was at 15:04. He was looking at them earlier. So he was probably looking at some of these up here. But again, when I look at this, I like to see these 400, 700, 500s, 1,000 like that. Because I mean, 1,700, that's just gross. That's just crazy. Look at Amazon. And again, in here, there's some other bells and whistles I'll be bringing over. I haven't put them in yet. So you can actually do filters and say, hey, show me the, 400% gainers. Show me the 500s, 700s. And then it'll pop them up in a list for you. And it'll scan through them. So that'll be another bell and whistle that I have that I'll bring over. I'm trying to get the core of the fractal system built out. Bringing the core over because the code this is in, it's radically different than in Visual Studio. So I have to, it's like rewriting the thing. Sometimes Amazon, some nice upsides. Well, so upsides. 206. Yeah, so something like this, I don't know. I would kind of be skipping this one because 100, 200, well, that's great. And everybody else would love that. Here, it's not so interesting. Let's see if I go to Google. So let's check out Google. So Google, the other day when I threw this one out, this is more interesting. So I was looking at the December 5th at 10:06. This one, because it was 6:09. And notice above here too on Monday, we had some really high ones. We had one in here for 2015. On Monday, I happened to not check Google. I should have. We had that 2015. Well, it went to 3,746%. So, that would have been a good one. I mean, even the one I ended up doing at the 12:27 time, excuse me, the 10:06 time. Somewhere 10:06, this one. I mean, this one wasn't bad. It had ultimately a 1,462% upside. And so on this one, $1,000 in, 37,000 out. If you could hang on to it that long because it's pretty eye-popping. So that is the basics right now. Now on the left, okay, so there's a data tab. You can come in here and see the data that's coming in from Yahoo. Yahoo has limitations, but it is free since it's in public domain. The open, high, and low and close are basically all the same value coming in from Yahoo. So don't expect to see a high and a low and a close. You can't. It just comes in this way, and that's the way it is. The volume does come in correctly, so I can see volume on contracts. The signal, the system is in the back end that's running is creating the signal in the STC. And there's various values that go into them. Right here, we're seeing the word true as a Boolean state. So there's different things that go into that. And that system generated on the back end as it's building this stuff out. Over here, we have got a combo box, bullish, bearish. That's bias. So you can just leave it on bullish. If the market, let's say it goes really bearish, we're identifying like on a fractal, we're like, oh my God, the thing may implode. Then you can go in there and select bearish. Like I think Rogue Moose did that for bearish. Now, it takes a minute on the bearish side, and there's a reason for that. When I ported it over to our days on our fractal system we have running over GoDaddy, I forgot to bring over one of the columns. And because of that, I had to write a stored proc to make up for the lack of that column. And that stored procedure, it's taken like 5, 10 seconds, 15 seconds to run to build up the necessary result set to get past to this. So that's why on the bearish side it takes a few seconds to load because that column is missing. I'm going to go back and add that column. I don't know why I missed it. I should have, but so anyways, I didn't check Walmart to see what happened. So if the market's overall bearish, like we're seeing, something happen, like we're on wave 100 on the index or the SPY, like maybe we're underneath the pivot, then you can go in here and pick the bearish side. Or, if you just want to try to find where there's some bearish plays for whatever reason, you can do that too. So on Tuesday, we had one thrown out at 1,281% on the bearish side in Walmart. So far, it's only moved 238.10%. So here's another feature. I tried as best I can in the math modeling, to have this thing try to find quality trade setups, meaning that even if the trade doesn't exactly work out, it will try its best to not have a lot of failures. So like you may not get 1,281%, but you might get 100 or 200 or 300% out of it, so that it's not a total catastrophe and it doesn't totally wreck the contract. But with that said, this is the real world, so no matter how much math I do behind it, when trading starts, kind of like all bets are off. But that's what it tries to do. So even though here we didn't achieve the 1281, and maybe it does tomorrow or maybe it doesn't, at least there's something in there that can be taken off the table. So it can be like, wow, this trade isn't working. Or you get to Friday and you still have residual money in it, so it's not a total wash. It doesn't happen all the time for everything, but that's what it tries to do. So like I say, this thing is kind of built for a 12-year-old. So somebody that really may not understand trading, know how to trade, but they can do order execution, and they can understand to go in here and define the max target. And that's the one they want to go after. So it tries to take a massive experience base and bring it to the front end very simply for people that you know, like they're busy and they can't really get into the mechanics of trading, you know, because you have a job and you're maybe trying to get into trading or trying to quit your job or whatever. So it tries to make it fairly simplistic so that, you know, anybody can kind of pull it off, because you can kind of come in here and you can see, you know, even on the bearish side, you can see various outcomes. So we don't really see anything that's zero yet, you know, so it's trying its best to keep the operator safe as best it can and to still have upside. Also, another thing, I don't really adjust the screen, so sorry if you can't sometimes see the top. You know, this. So, anyways, but it shows up down here. This information here, you'll see it says source Yahoo rose 257, signal count 6, the high, the low, the range. What that's telling you, so when you see that, see how it says Yahoo? Right now, it just retrieved this data from Yahoo. If I go back to last week, see how it says source is data warehouse? What it had to do was it took the data and stuffed it into our data warehouse for historical data, because Yahoo, they're always clearing out the data. So, you know, we have to have historical data. So that way we can go back and see how it performed. Now, remember, I was cautioning you, hey, don't take, you know, if you're seeing these crazy gains like this, usually it's because the contract's oriented wrongly. Even oriented wrongly, you can see there was 3 cents here, 298, and it had a 1,233.3% upside. So still, you know, the system's like trying its best to have something come out so it's not a total wash. So, you know, this kind of makes me look like I'm lying, but you know what it is it's like, you know, if you're seeing overriding target percent gains like this, then you know it's kind of like a little bit of a pass. Here, once again, I mean, you can take a swing at it. You can see here that it looks like it washed out to a penny and then it ran up. I don't know if it had, so that was Friday. So it really didn't, on Friday, it really didn't like that idea of a penny, because I'm looking over here on the BTO, so it's not really throwing those out. It will throw them out sometimes. Sometimes it'll say it's a penny. It'll say it's going to $2. So it didn't really want to suggest that. So here it suggested 33 cents for a buck at a 203% upside. The actual high was 205, so it actually went up 521%. So you can see, even when, you know, there's possible orientation that may be a little bit weird, it'll still, you know, try to do something. I don't know on the call side on this one, but let's see. And then, of course, going Saturday, Sunday, it's throwing stuff out. So to my point, see how we're at 1042 and this trade worked? Now we're at 1155 and it's saying there's a 37.2% targeted gain. The actual high is 205 for a 12.02. So to my point, once we get around 12 o'clock, we're starting to run out of time. So these trades, you can see here, there's just such a short duration between 12 and close that, you know, once we get at that point, you know, earlier on, 12 and earlier, like 1042, you know, yeah, that worked out great. So if you're looking on Friday, like, you know what crazy upside can I have? Just, you know, try to do it earlier than later, you know, early, like 10's a good time, maybe early 11 o'clock. So let's see, Oxy. So anyways, so the source is data warehouse and it tells the number of rows. And this is a number of rows that are returned. So on Oxy, it's saying that there are 600. Oh, wait. Excuse me. I think rows, excuse me, rows is actually regarding the data, I think. So it's that many data points that returned from Yahoo. Sorry. And the signal count P58, there's 15 of them. So it generated 15 here for that expiration. And then the high and the low on the contract is tracked. That shows the range. And then that shows the percentage of range from the low to the high. So it's pretty much about it. I don't know if there's any questions.
Yeah, I was just wondering when it's going to be released to all of us.
You know, it's going to be here pretty soon, probably in a week or so. I need to fix an issue on the database side, that missing column. Because if a lot of people are using it and they pick bearish, it's going to put kind of a load on the server. So it's probably about a week or so. And in the meantime, you know, Rogue Moose, I think you know, probably daily you can go through it and find stuff.
Okay, thank you.
Yeah. I mean, I wouldn't call this a holy grail or anything, but it does have some crazy results.
And then we got one other person that wants to speak. I'll invite him up.
Hi, hello.
Hi, how's it going?
Doing good. I just had a question about so when you're entering these plays, do you have like a stop loss like minus 20%, or do you let it go to like 0?
Right. So these contracts, as you know, they're really volatile. And in back testing, so I've done a lot of back testing on stuff, I found no really good strategy for stop losses. You know, if you set it at 50%, you know, that's a place you can go. It can knock your stop out and then still achieve the expectations. So the idea with this is when we have higher leverage plays like the Guggen stuff, that they're so cheap that, you know, when you risk some money, if they did go to, it wouldn't hurt you too bad because of the cost. The problem with the stops is, like, let's say you put in a stop and it's a multi-day swing. Like, let's say Google, let's say, you know, we're in at 22 cents. We're like, oh my God, he put, you know, 200 bucks in it. We don't want to lose it. So you set your stop at what, 10 cents? And then the next day your stops hit, you're knocked out, and then it turns and runs. You know, it's like, because a lot of the times I see on the internet and stuff, it's really weird. People will be like, okay, I'm doing a 460 call. So you have 460 bucks in one call, and you're trying to have a target of $5.32. I mean, to me, that's like a little crazy because you got 460 bucks on the table, you know, one contract for 532 upside, you know. So this system is like trying to do something different. It comes in here and it says, you know, let me find where there's a lot of leverage and let me find where that's cheap leverage, you know. So it doesn't, I just can't, I can't really answer the stop side. It's, you know, if you got 100 bucks in there and you can't afford to lose more than 50 of it, I guess you put in a stop. Then overnight, maybe, you know, it's opens up at a penny ask and 0 on the bid. I don't know.
Yeah, that makes sense.
Yeah,
Thank you.
it's positive intent on this. It's, I don't know. You know, and I joined a lot of other things like there's Schaefer's and there's that Trade Algo, and I'm always checking out other people's systems. And, you know, some people are like, oh, we set our stop at 50%. But then like Trade Algo, I'm always getting text messages from him. Oh, look at Bob. He just won 50%. Joe won 75%. Maybe they'll have a 200% play, you know, and like this week, that's not what we've been experiencing. You know, we had 2 plays already hit 12, you know, 1,000, 1,200%. that AMD that, you know, it had, that one was 1700%. You know, it's like if you get knocked out of a few trades, they go to zero, but you're, you know, taking out 700%, 1000%. You know, ABNB 2 weeks ago, it went 5000%. You know, it's like, yeah, so you kind of have to, and the thing is, when you do this, you always want more. It's like Megs was mentioning. She goes, "This is like crack." So, you know, you get 1000% play. You're like, "Well, that was great, but you know, I need more of that, and I want even higher percent return." It's hard to. Then you don't. And then some of these, you know, you're like, "Well, I shouldn't put in 1000, but I will," and then it goes bad. But you know, maybe you're expecting 1000 or 2000% on it. So really, it's your risk. You know, the Kelly criterion's 2% of account, roughly a little over 2% in any single trade. And you know, you can see here on the when you double click this stuff, you'll see it back testing itself. So you know, you kind of have an idea, like as I click, if you guys can see it, kind of have an idea of what's happening.
And just like you were just
You know,
talking about, Russell, maximizing your risk to reward. You know, like if we're on a normal contract that it's identifying, you know, say 2000%, you know, if you hit on one of 20 and 20 lose, I mean, you're essentially breaking even. So, you know, you're playing the risk to reward ratios.
yeah, yeah, definitely. And this week so far, we've seen that, you know,
Yeah,
favorable.
Google.
This week was favorable, and yeah,
Google's what,
yeah, I
2000%,
mean,
Apple 1700%, plus all the other ones. I mean,
yeah, yeah, it's just phenomenal. It's like astounding. It's just like you're like, wow, you
and I
know,
think a couple people had questions in the side chat there. If you look in the chat bubble, a couple of them were asking, you know, how do you identify a good setup? And I think part of the system is designated to identify the most highly probable setups. Am I correct?
yeah, it is. So when it's showing like Airbnb here, when I'm checking the signals, like I come in here through the day and I'll check them. See how it shows this one's 1152%? That's the one I want to go after. You know, we've got a 41, a 49, a 76, a 71, and that's great. I mean, nothing wrong with that, too. There's nothing wrong with making 70%, 80%, 107%, 203%. But what I like the AMD play, that one had. So when you're trying to identify the trades, like let's say you come into AMD, let's say you're at work and you're like, well, you know, it's around 3:30, market closes in 30 minutes. Let me click on a few tickers I like. So just to keep it simple, you're like, you know, I like Apple, AMD, Goog. Can't remember if Tesla's in here. I think so. Yeah, Tesla's in here. So you're like, you know, I like a couple of those stocks for whatever reason. So you come in here and it's, you know, so this one happened at 3:04 p.m. But let's say you check it at 3:30. And you come in here at 3:30 and you're like, okay, I had a signal at 3:04 p.m. And that's for 433.3% upside. And you're like, you know what? That's outperforming these other signals up there. You know, I like that idea. And the system's trying to identify that for me through a bunch of math, a bunch of witchcraft, and you double click it, you know. So if it's around 3:30, you double click it, you'll see some data because there's a 10-minute lag, but by then from 3:04, the data's filling in. Like, I like that idea. So you're going around 42 cents. Well, you know, today it hit 765 for 1721% upside at the close. So we're just looking at signals that are, we're looking at the target percent gain that are outsized. They're bigger than what we're seeing around us. So at this point in time, if this was at the bottom here, right, since we're at 330, we're looking back on a 1504 or 304 signal, so it'll be at the bottom. So when I look up, I'm seeing 167, 70, 126, 159, 183. And I look at this one and say, oh, wow, 433.30. That's a lot better than all the other ones above it. It's just an identification model. It's like trying to find where the system thinks there's an outsized gain, a gain larger than normal. So if I'm looking above, I'm seeing, normal seems like 145, 183, 200. Somewhere there is a kind of a normal gain. And that's fine. But I'm like, I want to kind of see something that's bigger than that, 433 is bigger. That I did not check AMD yesterday, but that one I would have keyed in on. I'd have been like, oh, 433, I like that idea. So, again, 42 cents. So a $42 contract going to $765 for that 1,721% gain. And again, you can see up here on the price data that it was around, the 42 cents was here. So it was kind of around the 40-cent area through the close. So we're trying to identify what is a bigger gain than normal. And the way I like to do that, I like to present it to myself like this, because I just like to look through. Again, like if we go to Goog, that was another one we traded. So we see the system's working. So again, Goog, when I came in here on Tuesday and I looked at the 10:06 time frame, I saw the 609%. Right above, I didn't check this Monday, but right above it, I saw some 2000s, some 1210s. I'm like, okay, that looks pretty interesting. So that's why I sent this out. I'm like, okay, we have this potential. And you can see how it just, thing knocks it out of the park. Because, we have on Monday around noon, we had that 10-cent contract go to $3.40. So 3,300% upside.
I think that was a question for a lot.
How to identify which ones to key in on. Yeah, so that's how I identified. I just look at gains in here. Like if I go to Ford. So I look at Ford and I'm like, oh, you know what? Normally the gains are 96, 93%, 38% over the weekend on Sunday. And then I see this one at 109.50 and I'm like, that looks kind of interesting. So I click on it. The actual gain was 90.48%. So that's what I'm doing. The system is throwing out different combinations that it believes are possible with the target percent gain. Because, when you're trading, you want to try to maximize risk to reward, right? So if there's a contract that has a 5% upside, you're like, well, why do I want to put money on the table for only 5%? So it's like if you had a choice of different upsides, you always want to try to pick the higher upside. And since the contracts are vast, there's a lot of depth to them. This is trying to orient you into the higher paying contracts. And again, let's say it's not a mistake, but let's say you come in here and you're like, oh, I like 95.5%. I can live with that. So you click it, and it so far has only run to 81.82%. It's So maybe you consider that a mistake. Like, oh my God, I should have picked the 110% to get another 20. I mean, you're still ahead in the money. So it's not like the system's trying to figure out these combinations that are viable, that can work. So it's not like you're blindly going into contracts thinking, well, I hope and pray that this one's going to work. It's running a bunch of math to try to figure it out, to try to keep the, speculative capital safe, because this is speculation on these. So it's trying to keep it as safe as possible, as mathematically possible, so that, when you do come in here and you do a buy, that you can have an out. Because I know, like, you guys are in Milk's thing, and that's always the thing, right? You're trying to position so you can have an out, so you can have a positive out, so you're not trapped. When you get trapped, that's kind of scary because, maybe you're starting out and you have small investment capital and you're trapped time and time again, and that trapping causes you to take a loss. And you just, so this is trying to figure stuff out so you don't do that. So even if you come in here and you pick a meager contract, and maybe meager 73.5%, and it only ran to 17.65, well, you can see over here where it picked it, it was kind of near a top when it kind of suggested that there may be some action in it. But the good thing is, forward looking, it did get above that. So, you were trapped. So after you got in, maybe you're trapped through this cycle, but, it lifted and there is an out, to try to escape that. So it, again, it's, and it's throwing out things. I'll go back to Apple because this was a real one we did. When I'm looking at the target gain, so coming out of the weekend, Sunday again, it had these contracts and it was saying, an 87.7% upside. So even if you picked a contract generated Sunday, at the end, it was over here. So it still had a 359.68% upside, even coming out of Sunday, if you bought it at the open. And you can see we're trapped for a few minutes here during the day. So we have the 6.5 hours I had to live through. But then we had that explosion up. So, it's, again, it's trying to find contracts. It's trying to pair all this stuff up and present it so you can make a decision. It's a decision support system. So you can come in here and be like, I like the 727% upside, low risk, 22 cents. I could buy one contract. Like High-End Ken, he's trying to make $10,000 out of a couple $100. Very possible. Have to be super careful, super selective. It's like Rogue Moose was saying the other day, just mentioning he was talking to the 70-year-old guy, like, how do you survive in this business? He goes, well, I don't take bad setups. I only take good trade setups. So this is trying to present the good trade setups. And it's trying to present them in a way that it makes it easier for decision support. So you're not looking at the chain being like, oh my God, I don't know, can it hit the $40 call, the $10 put? It's like on the strikes, it's like, you're left trying to figure it out. Like, I don't know, maybe it can hit. This is trying to figure that out for you ahead of time. It's like, here's some options. And then I like to pick the higher targets. So when I look up here, I like to look to the back a little bit, see what's higher. 727 is certainly higher than these. So I'm like, I'll take a shot at that. It's only $22 on the line. Or maybe you buy 10 or 2, 5, But it's low risk, high reward. And Milk was saying, I mean, maybe, you do several of these, you have 1 lose, 2 lose, but you have 3 work out. And it's simple math. If you have a 727% upside, sure you can have a couple of them lose. Like this week, you know, cat wasn't that great. And I knew it wasn't that great. I could tell, but I threw it out there anyways. You know, it had 100-something% upside. But we had Apple on Monday, you know, which was the 1195 that it got to, but the calculated gain was 727. So we had Apple, so it had a 727% upside at that entry at the 22 cents. We had Goog, which was another big win. You know, just those two alone, if there was a couple other losses in there, I mean, these just totally offset the losses. You know, so it's main thing is risk management. You know, if you come in here and you're like Hein Ken, let's say he's like, I got to make 10,000 by Christmas. You know, 200, he has $200. He's like, oh my God, the only way this is going to work is for me to put my 200 into here and to make 727, and then to take those wins and dump them all into something else, right? That's probably not the best strategy. You can get lucky, like I was showing. I was calling it the wildcatting, because they use that in drilling. So it's like if you take, you know, money and you dump it into something, all your portfolio, and then you take that win, if you have one, and dump it into the next one, sooner or later you're going to hit one that's not going to work. And probably that one's going to lose everything. So here it's, you can try to put a stop loss again at 22 cents. And you could be like, well, I'll put it at 50%. See, so you know, you're risking $22 to save $12 or save $11 or save $9. I don't know. My wife and I go to McDonald's and, you know, we spend $23 and then we're hungry again, you know, a couple hours later. So, you know, are you better off saying, okay, I'll do the 22. Now, you know, it's either I'll take it to the target, or maybe I won't get target, but I'll at least get something above the 22 out. You know, versus I know on the internet they preach stop loss, and futures is a whole other thing. Like when Milk's showing you guys how to trade and what he's doing, it's a whole other ball of wax. Your account's open. So you could really, you know, if you don't have stop losses and stuff in futures, that's a whole other ball of wax. Trading here, it's defined risk. You can't lose any more than the $22. So if you go into that trade and you don't have stop loss, you lose $22. Well, you know, where else you gonna try to salvage $10 or $5 and maybe have the trade work out? Because in back testing this stuff, it doesn't back test so well. Sometimes these things will go to a penny and they still work out. And it's hard to have a finite level for a stop. You know, they already are a defined risk. It's 22. So lose any more than $22. In futures, when you open your account up and you join, all bets are off. I mean, you know, you can lose a lot of money fast. Here, it's like you lose 22. So, you know, in a sense, and that's why the prop thing's so great, right? You put a small amount in the prop thing, you're leveraging a larger amount of money. Here, it's kind of the same deal. Small amount, leveraging a larger amount of money. So, you know, you kind of we're trying to get leverage to work for us, and we're not trying to really be cognizant of a stop and try to salvage, you know, $10 or 11 or $12 out of a $22 trade. You know, because in here it throws out like a $2.28 trade. Nothing wrong with that. So for 228, yeah, probably there you'd want to try to have some form of a stop, you know. But I wouldn't really even take that trade because it only has a target gain of 41% and the actual is 25. I mean, I want to take these 500, 400, 1,000% potential trades. I don't really want to take these higher cost trades. Or you know, this 41%. It just doesn't make any mathematical sense, especially when the system's sitting up here spitting out a 727 for 22 bucks. I mean, that's almost 10. I could go 10 times this for what I can of one of these at 228. So if I go 10 contracts here, I'm at 220 bucks plus commission. And here I'm at 228 plus commission. I mean, it just makes sense to go into this stuff and let our leverage work versus trying to knock out 41%. It only ran to 25. It just, so we want the math to work for us. I'm going to take these trades that are cheaper with higher upside potential. And I just like skipping this other stuff. There's nothing wrong with it, but it's just, you know, you're getting more money on the line for a lower upside. So it, you know, in the reward to risk model, I always talking about 1 to 1, 1 to 2. Here it's like a 1 to 7, right? 22 bucks to $1.82. So, you know, at 727%, it's for every buck, you know, you're getting $7 back out. So
And then we had
reward to risk is more favorable.
We had another question too, Russell. So they kind of wanted to know some of the stats on the system. I know on what you called out personally was roughly a 90% success rate this week, including what Moose pointed out. But I know there's additional contracts in the system that isolates. So I think we discussed about tracking those stats in the data warehouse moving forward.
Yeah, we can, as the data warehouse gets built up, we'll keep stats up here. And you have to, so when I first started trading futures, so I came from a farming family, we were always selling futures, right? We were the riders of the futures. So people were buying for wheat and sugar and cotton. But anyways, when I started trading futures, I started trading oil and gold and silver and live cattle, coffee and orange juice, commodities. I was at a company called Compact Trading. They were out of Phoenix. Mo Ansari's over in California right now. And he was telling the story of, so this was like 85, 86 when I started trading. And he had this radio program he would come on daily, and it's called Market Wrap, and he'd talk about stuff. And he would say when he first started trading, he was like, you know what? I hired a bunch of programmers and we tried to backtest everything we could. And he said, he goes, you know what? After spending hundreds of thousands of dollars over the course of a couple of years, I threw it out the window and was like, I can't backtest my way to profits. It's impossible to backtest the way to profits. You know, so he, you know, and when I heard that, and I had talked to the guy a little bit, super smart guy, very good at commodity trading. Like, and at that point, you know, I was programming, right? I was using Graph in the Box and doing some back testing and stuff. And I was like, yeah, I arrived at the same conclusion. If you go on Quora, there's guys in there that have like, I've been back testing for the last 25 years. And they're always trying to refine the system, right? Turn the dials and knobs and switch the levers and stuff. They're like, and they finally get to a point after all that, you know, decades. Wow, it doesn't work to back test.
That's my experience as well. It looks good.
It looks good. I know. You can offer up all kinds of back testing and be like, look how good that worked. 100% win rate, 90%, 50%. It just doesn't work. This thing is forward looking, and it's just like I know you guys do milk and your thing, you know, you're looking at your order flow coming in, order blocks and stuff, and that's just how you got to do it. You just got to.
Yep, real-time data and forward-looking.
You have to, yeah. You have to, because the information yesterday is gone. I mean, whatever the market did yesterday, fine. What's it going to do tomorrow? That's the question, you know.
Yep.
And can you orient yourself to take advantage of that? You know, pre-position yourself to have that potential upside. That's what it's all about. And we saw this week the thing was figuring it out. You know, however it figures it out, it does all that. So, and it tries to present it like Rogue Moose. So Rogue Moose, it's kind of a testament, right? Yesterday, I think was the first day he showed it. So that was his exposure to it yesterday. And I think already he was catching trades off of it. You know, so then just kind of opened it up, tooling through it. You know, not really, no explanation. Just, oh, look at this, look at that. So it's just, you know, it's trying to be very simple with what it does. But yeah, we can produce stats and stuff, and for all it's worth.
And then I think one of the other projects that we'll have eventually, once we get all the data management stuff done, is having some automation with alerts in a channel. I know some people had asked about that, so that is something in the foreseeable future. But we're just continually working on improvements.
Definitely. Yeah, Milk, myself, and Rogue Moose were working together on all this stuff to try to, you know, continue to expand it.
And I think we got a few people who raised their hands too. If you still have some time, Russell.
Yeah, a few more minutes is fine.
Okay, I think Ikeo. I'll invite him up real quick. Overlord.
Yeah, so the question I had related to the way in which data gets handled. So when you pull down the options and then it resets what the highest rate that was reached as far as the price point on the option, does it just reset the calc based off when it hits a new high and then only maintains whatever the new high is? Or do you log over time what the price action was that varied?
Yeah, so in this list box we have in front of us, if you can see it, I'm understanding some people can't see it.
Yeah, I can't see anything.
Oh, okay. Yeah, when you see it, it starts to make a lot of sense. But so what it does after signal generation, it pins to the high, the highest high moving forward. And
Okay.
what good that is, yeah, that's just something the way I like to see it, because I want to click in my list there and I want to see all my highs. You know, so I can be like mentally, because like it's a psychological game, right? So I can see that, okay, on the past few signals, I, you know, had a target of 94%, 74%, 77, 41%. The reality was I only had 25, 55, 56%, and 72%. So mentally, I can be prepared. I can be like, you know what, if I'm not liking this trade and I'm wanting to move on from it, I can be getting 50%, I'm getting 75%. So when I'm actually watching my trade screen, I can be like, you know what, I'm going to take it off here. So, you know, it pins to the past highs in that frame on that signal. So it's pinning to the past highs. So I have an idea visually and mentally what it's been achieving. So you have that, and then you have a target percent gain where you're like, you know what, maybe I'll take off 50% here and I'll let the remainder run and try to hit my target. You know, so it's kind of how, so it's a comfort level. It's like, are you comfortable letting the thing try to figure out and get to the target gain? Or, you know, do you want to try to just get a quick hit and be like, I know it shows 1,000% upside or 700. I don't care. I have 50 in hand and I want to take that. Yeah, so it is pinning, to your point, to the high, the highest high moving forward. You know, and it's visually showing it on the screen. So you have a reference point.
I was sort of wondering as well, when open interest comes in at the beginning of the week and when that further out in the money open interest increases, as the price accelerates, is there a multiplication factor when, you know, market makers are forced to delta hedge? And is there a way of like perceiving an acceleration in like the momentum of that over the course of a week?
So, yeah. So the people that deal with the Greeks, I don't use Greeks. This has nothing to do with any of that. It's has its own logarithms I've developed over the years that are not using any Greek information. So it's not using any of that stuff to achieve this. Because there's a reason behind it. Yeah, and there's a reason behind it because with that information, you saw Apple, you saw Google, AMD was kind of crazy. Um, so the reason I don't use that is I can't derive what I need to from that data. Those Greeks are all broker dependent. There's no institution out there providing, the Greek data to the market from a centralized hub. The brokers are developing that information. And this is using the chain and examining the chain, and it's based on the market maker stuff that we'll see in the in the system. And so it's artificially under the covers moving things around. And if you want to equate it to Greeks, you can for kind of a better visual understanding. But under the covers, it's playing chess, a form of chess with the market and the options, and it's moving them all around. So it's literally, I'm not kidding when I say it may take 1,000, 2,000, 10,000, 20,000 calculations on one chain for one underlying instrument. So it moves everything around. That's why I could identify Google, I could identify Apple, AMD. It's like, hey, this can have some upside to it. That's outrageous upside.
Yeah, I was asking. Oh, sorry. I was asking sort of from the standpoint of options inflow causing price action to be modified by the ever increasing delta exposure market makers would have to it potentially on a move. And so really wondering, where how like some sites will track unusual options inflows, and then especially the leverage scenario of the out of the monies, as they begin to move closer and closer in the money, their ability to accelerate price action, whether or not there's a way of like gauging the momentum impact of an increase in open options interest as it would relate to like when we open this position and the signal, and then as like a confirmation value. So it's like, should I sell it now at 200? Well, I'm seeing that the inflows into the options are increasing, so there's a higher probability that it's actually going to hit our 1,000% number rather than me getting excited about a 200% move and exiting prematurely, because on the back end, we've been logging the open interest from initial position, and we're seeing now all this option flow entering into it to corroborate the move.
Yeah, there's two scenarios there. I mean, one is potential IV, which could inflate that price to our price target faster, from your initial intake. Now, if you're looking for greater, like what we call gamma exposure, dealer exposure, as a lot of the other public knows, you would have to be looking at a very liquid ETF or ticker, and with a massive amount of positioning. Like if you're looking at SPX or Apple or something, you're looking at hundreds of millions of dollars to offset that kind of dealer positioning. Most of the stuff that we're going to be doing, other than very illiquid tickers, it's not going to have that much of an effect at first.
Okay, thank you.
Yeah, like A, B, and B. That's so thinly traded. Trying to apply Greeks to it, or just like, So, as far as I know, there's all these things out there, black box and all this stuff, right? They're using the Greeks and they talk all this stuff, but I don't know anything about it. I've never used them, but those products all seem kind of immature. Like they seem like the maturity on top of those, they need another 5 or 10 years, and they need to hire some more people that are maybe a little more experienced, you know. So I don't know, you know, because for a lot of things, like get so many newsletters, you know, they just, it's like people can't root out stuff that can move that I've seen very well, you know. So I don't know, but this is just totally, like I was saying, it's not even using open interest, doesn't even go there. Open interest, it's fine, but it doesn't even rely on that. That's stuff. The open interest problem there is it's static, right? The open interest, it's computed before the session, and you don't know anything about it throughout the day. So it's just, to me, it open interest. I do use it. You know, we have that strike command, and you can go into the system. You can see where your open interest is lying and stuff. But for a real-time tool, it's not. It can't be used. I don't use it. It doesn't go into any calculations on this.
Well, I have one question, and I don't know if you would know, but on TOS, when it represents the open interest in contracts, when you're looking at it, does that represent the open interest as of the prior day, or is that within the current time frame of your session?
So the CBOE publishes that prior to the session opening. So you're
Okay.
getting a static picture or something.
Okay,
So that's
so
why, like on those GEX, yeah, you know, on the GEX stuff, it's great and everything, great. But, you know, it's like they'll take the OI and then they'll try to add in volume, and they have a bunch of witchcraft and voodoo on top of that. And that's fine. All I care is I want to find a contract. It's going to make me 1,000%, 700%, 2,000%. That's what I'm about. I don't, all this other stuff, I don't really, you know, get into, because I just, you know, I don't want to rely on somebody else's Greek calculations. I do my own stuff, so I know exactly what that number is, how it's derived, and you know, because I need stuff that's actionable. You know, I want to make sure when I'm, you know, developing signals and stuff that it can be actionable and it can work. So, you know, there's a like Polygon. I use Polygon's data, Polygon IO. If you go there, they started bringing in option contracts. And they actually have out on the website somewhere, I read it one day, but they talk about computing the Greeks, how they were having all these problems with computing the Greeks. And they didn't understand that with every contract, there's arbitration that can happen between the contracts, because you can never truly have the contracts that are all flat. It can't happen. So they were saying, oh my God, you know, this contract's always coming out with a 5-cent profit, or this one with a 1 penny profit, or we can't ever seem to figure that out. And it's because of the way it works. You can't develop. So their Greeks they provide are, you know, what they've cobbled together, right? Polygon. I'm not ripping on them. I mean, that's just how you do it. You know, a lot of people use Black-Scholes and reverse out for the variables, you know, which is fine. But I just, you know, this system, the stuff Milk, Rug Moose, and I work on for this, at least, it, you know, it's based on things, you know, you see in Milk sessions, you know, very good, very accurate, you know, because of the way everything's being approached, you know. And I know Milk, you know, he'll talk about the exposure and stuff in there, and this is doing things just differently to achieve the results it needs to, you know, try to knock contracts out of the park. You know, and the thing, you know, it's a testament, like this week, things thrown out, they're kind of moving. And, you know, we want this thing to outperform what the target percent gain is. You know, ideally, we want icing on the cake, you know, if it going 50% or 100 or 200, you know, we want it to outperform that and overshoot the target ideally. It's not always going to do that, but, you know, that's what we're trying to shoot for. You know, we don't want to spend all our lives trying to invest in, knock out 5%, right? I want to have some meaningful upside that's life changing. So,
All right, I'm done with my questions. Thank you for your time.
You're welcome.
no problem.
I had two questions. So I was watching Rogue Moose the other day. Actually, no, it was today. Sorry. And he was showing both the bullish, bearish sides of the Periscope. And sometimes there was a high percentage on both sides to be gained, even when earnings weren't in play. Is that still something you would suggest playing? And how would you choose a side? Would you just play both?
Yes. Yeah, I know what you're saying. Because sometimes you'll come in and be like, my God, it's 4,000% on the short side and 4,000 on the long side. I could probably knock out both sides for 8,000 net gain. But so what it's doing is when you see these astronomical values on both sides, like maybe it's 9,000% or 6,000%, it's basically saying that you're probably going to be somewhere in the middle. You're not. Neither one of those sides is really going to be that workable. When you come in, you want to see stuff that's more like what's on the screen here, that looks more. Now I call this normal. A lot of people come and be like, well, that's not normal. It's showing 227%, 2,200%, but it's showing like tapered results, It's not all flatlining. It's not all like, hey, here's 4,000% across the board. I think, like, was it the other day, Rogue Moose, he was showing, was it BA? So I think it was BA. So here I've got BA on the bullish side, 39%, 40, 33, 34, 15. So you could look at that and say, yeah, that looks, kind of normal. When I scroll up, I'm like, yeah, looks like everything's driving. The only weird one was we've got an 8,588%, 9 cents to 782. But, it's kind of like everything looks like it's driving in here. Now let me go to the bearish side of BA. It's going to take a second because of that column I need to add to the table. It's taking quite a bit of time. All right. So when I flip to BA, and I think this was a question Rogue Moose had, on different parts of the system, like Milk, Rogue Moose, myself, we kind of have different areas we're kind of focusing on. So Rogue Moose, and him and I are working together. He's working on the MooseBot side. We're connecting our two sides together to get information out through those MooseBot commands. But at any rate, so when he came in here, he was mentioning, he's like, hey, what do you think about this? And I was like, well, whenever we're seeing this, to take, because you can look down that target percent gain and it's astronomical. And it's pretty solid going up and down. The only one that's not is a 673. But since everything else in here looks like that, it's a visual cue to not, I wouldn't entertain doing the put side at all. I mean, it's great. It's thrown out 9,000%, 3,000%, 4,000. So when I see that, I mentioned, immediately switch bullish. By definition, the markets are tuned to the long side overall. So that's why when you come in here, it always picks the bullish side by default. And it's just because the market overall, it's an instrument that, works with inflation. There's a lot of 401k money that comes into it. It's just a biased system to the long side overall. So it's always picking bullish by default. Now in the fractal, like maybe at one point on wave 100 daily, we get something that's underneath the pivot and we're like, oh boy, the whole market's just short for an unknown amount of time. Maybe at that point we come in here and start to pick, bearish on a lot of stuff. But overall, the market, through eddy and flow is tuned to the bullish side. So that's why it comes in here and it, defaults to bullish. There is an auto too that I haven't added that's in the system. And the auto kind of tries to figure out which side. So when you pick auto, it's not in here right now because I was just trying to get the basics going. But when you pick auto, then it just tries to, keep you calibrated to what it thinks the overall market's doing. But bullish by and large is just, the overall direction. Because even in a falling market, when you pick bullish, you'll have those pops here and there.
Okay, thank you for that.
Yeah.
I did have another question. Currently for the tickers, you do have to manually refresh everyone in order to see the results. Is that something that be automated once more servers were allocated?
Yeah. So you're saying over here, like when I click Baba,
Yeah, you have
and
to
then it
manually
fills in the
click.
results. Yeah, you've got to click the ticker. There's a bell and whistle that I need to bring into it that you can tell it to search for outsized gains, outsized targets. So you can tell it to search for, 400%, 1,000% gains. I just haven't brought it over yet. I was just, trying to get the basics up and running so that it's available for everybody to use. But I'll, eventually we'll get that in there so you can hit a key or whatever and be like, hey, show me my 600% possibilities, show me my 400% possibilities, and it'll automatically do that. So you don't, because this is oriented right now the way it's set up to, clicking on specific tickers, right, symbols. But some people like some people, I don't know, they just like to trade Tesla, what I'm saying? So it's like some people just go down to Tesla, but if the person's agnostic, they don't really care what they trade, they just want gains. Then that bell and whistle where you can tell it, hey, show me 300, 400, 500% gains comes in handy. Because then you don't have to weed through them to try to find some of these.
Okay. And just back to the first question real quick. So for those sides, which are those high percentages, you would more likely suggest not playing them at all? Just to confirm.
I would not. When I come into BA, so I'll go back to BA here. So when I look at Boeing, and I see that we're kind of like solidly in, quadruple digit percentage gains, I tend to skip over those. So I got Boeing up here, and you can see we've got 9,942 at the top, 9,008, 9,006, 9,916, 7,950. So we've got really high gains, that are targets. So I look at this and I'm like, probably not going to happen. So I'm not going to bother with this because to me, I look at that and I'm like, these are just baited contracts. They're just trying to get people to buy them. They've priced them such that they're just trying to get people to go into them. Now, if I click into one on Monday, let's say I go into the 7-cent one, maybe it could prove me wrong, but it had no higher high than on the signal day. And in fact, now we're down here to a penny. So, yeah, when you're seeing stuff like this, and you're asking about playing them, so this one's proving me wrong, making a liar out of me. There was one that was at 6 cents. It had a sell to close at 5.89. It actually went to 19 cents. So it had a 216% upside. But by and large, so maybe you do pick bearish, or maybe you're like, oh, well, it's 6 cents. I'll just try it for fun. you know, it's making me look stupid because this one's 900%. So, but by and large, I typically try to stay away from this stuff when I see these outrageous moves. On Thursday, you know, Boeing, it did get some crazy upside on these puts, but we had one that went 1200%. But by and large, I just, when I'm seeing a solid thing like this, I usually just kind of skip over them. You know, these 6-cent plays, 4-cent plays, I guess, you know, if you were fast at executing on this stuff, you know, we had this 4-cent go to 40, 900% upside, 6-cent go to 83 cents, 1200% upside. So some of these were even working out, even with what I'm saying about this crazy upside. But I kind of tend to skip over them. But, you know, if you're, I guess if you're feeling saucy and like, you know, I'll give it a shot anyways. You know, some of these would have worked out. Some of these had some really crazy upside. They were just spikes, just briefly, very brief. But if, you know, if you're able to sit in front of the monitor and watch these, you see these spikes in them.
Gotcha. That's it for now.
Yeah, I mean, that was, yeah, I mean, that was 6 cents to 83 cents. I mean, you know, even 10 contracts, $60 in that.